how do you see the role of blockchain crypto evolving with traditional finance, and what impact do you think might this have on wealth management?
Yeah. Well, there are a bunch of different ways we could talk just the entire time just about that, I think. But a couple of things that kind of come to mind right off the bat would be one is digital assets themselves, or specifically what people often refer to as cryptocurrencies. But I would encourage people to consider from a kind of wealth management standpoint at digital assets, just thinking of them as the role that they can play in the traditional financial ecosystem. So what I mean by that is a couple of things. One is how allocating into that asset class can drive value from the more traditional wealth management, modern portfolio theory, business school, Wall Street type of mindset. And that is really as a hedge against volatility in other asset classes. So there are a couple of related things to be thinking about there. That one of them is that most people put most of their money into stocks, bonds, real estate. And by the way, I'm not an investment advisor. It's not tax, legal investment advice, but just talking through what a lot of people do, talk with 100 people, probably going to see at least 70, 80, 90 that meet that type of profile. But that being
Mhm.
said, what a lot of analysis is being modern portfolio theory analysis, research from Forbes, ARK Invest, surveys of high net worth individuals, family offices, people even with kind of more traditional framework and habits are indicating a preference to allocate somewhere between 2 and 10% of their overall assets into the crypto or digital asset space. And there are a couple of reasons for that. One of them is the kind of the smoothing effect that can have on the broader portfolio, that when the most of the assets that you have that might be in, say, real estate or stocks, when those are zigging, crypto might
Mhm.
be zagging the thing. And we saw that in certain housing crises. We saw that also during COVID, that there was more resilience in the digital asset space in a lot of ways compared with some others. Saw that also during during kind of collapses of the bond market, that Bitcoin and other digital assets ended up significantly outperforming. The examples go on, but all things be equal, it can really provide that smoothing effect. And when you think through that as something like, say, $100 million portfolio, just for easy math, someone putting in something like $5 million into digital asset, yes, it's volatile. And if there's downward volatility and there's a 30, 40% drawdown, functionally you still have a $100 million portfolio if you put that $5 million into the digital asset space within a margin of error. But
Right.
then the other thing to be considering is the asymmetric upside. When that's properly managed, there is incredible upside potential of being able to double, triple, quadruple that specific investment. And so, for example, if that $5 million initial investment becomes a $20 million, then that's something where that overall $100 million portfolio is up, very significantly. So that's another way to be thinking about it. The other thing, though, is that I think digital assets, crypto, can learn a lot from traditional finance. That a lot of people came into crypto with a bit of a gambling mentality. And if this is just for fun and it's with money that don't care about and can afford to lose, then maybe it makes sense to gamble, maybe it doesn't. But all things being equal, a lot of people came in with a gambling mentality, but expecting it to somehow magically turn into a good investment decision, and just saying, oh, I'm going to just do 100x leverage trading on crypto futures and it's all
Mhm.
going to be great. And then some people lost everything. Other people lost more than everything, where these stories of people taking out a credit card debt to then 100x leverage it. And then they owe
Mhm.
their hundreds of thousands or millions of dollars in debt, in addition to having lost their entire crypto principal. Those sorts of things, I think, have given the digital asset and crypto space a bad reputation. But at the end of the day, taking on tried and true investment approaches is
Mhm.
something that you can do. Asset evaluation, disciplined analysis frameworks, these sorts of things, proper risk mitigation, regulatory frameworks. These are all things that, when they're applied, they can apply to any asset. Just because real estate has different terminologies than the stock market doesn't mean that they're entirely different beasts. Maybe they're apples and they're oranges, but they're still both fruit.